Hello guys, welcome once again to Traders Delight. How have you been and how has been your trading sessions? If you're new, you're welcome to the channel where you get the best support for your trading, and we give out free trading strategies and signals once in a while. And then we also have running currently our mentorship program, which is running for the next 13 months, so you can join in and start your own 13-month journey as well. As much as possible, we try to make you understand the nitty-gritty of all principles that will help you profitable in trading. And if you're new, like I said, please kindly subscribe to this channel, turn on the notification bell, and stay tuned for more amazing videos coming to you from Traders Delight. For the old ones here, you know our routine. Please, once you watch the video, give it a thumbs up if you like it, and come to this comment section. Tell me what you learned about the video, what you really liked about it. And then if you have a question, ask in the comment, I'll respond to you. Today we want to do a follow-up and a continuation from where we started last video. And last video we talked about technical analysis and price action. So we'll make clarity as regards what it really means and what it entails. And I told you that the success of most traders is based on two basic things: their understanding of the price action technical analysis, and which is basically understanding of the chart, and then their understanding of how to use indicators. All these are put together in a word called technical analysis. If you are good at using indicators, you are also a technical analyst. If you are the one that is just very good at using price actions, you are a technical analyst. So I want you to please follow through, because today we'll be looking at something that is called support and resistance. Support and resistance, it is very crucial. If you really will be very good at technical analysis, you need to understand what support and resistance is on a price chart. All right, before I go into this in depth, I want you to have a basic understanding. I'm going to be explaining something about a candlestick, so that from there you can have basic understanding of what I'm talking about. However, before then, I want you to know that support and resistance is one of the most widely followed technical analysis technique. Is one of the most widely followed. If you don't know how to use indicator and you know support and resistance, you can easily trade any commodity. It works for any commodity. So in the financial market, definitely, like I said, it's a simple method to analyze a chart quickly to determine 3 points of interest to a trader. There are basically 3 points of interest that support and resistance help a trader to get. Please note this. Number one is the direction of the market. With support and resistance, you can get the direction of the market. You can get direction of the market. I will show you very soon. With support and resistance, you can get your timing for an entry into the market. You can time yourself to know when you enter into the market, and then you can also establish points to exit the market, either for a stop loss or for a take profit. So you need to just know how to exit the market correctly. If the market is going against your prediction, then you need to be able to set safe stop loss. And if the market is going in a direction, you need to be able to know how to have a perfect exit. Now, I need to explain something to you about a typical candle. Hold on. Now, this is called a typical candlestick on a price chart for any commodity. once you change the form of the price chart to a candlestick, this is what you basically see, especially on the default, where the green candle represents the bullish candle. For bullish means the price is going upward, and the red candle represents a bearish candle, which is price coming down. Now, I want you to take note of this, because I'm going to be using these terminologies when explaining in depth of support and resistance to you. If we look at the candle by your left, if you'll see this is the green candle, which is by your left. You'll realize that there's a place called the high, there's a place called the close, there's a place called the open, and a place called the low. Every candle has these four, but for a bearish candle, a bullish candle, they are both located at different places. So you need to understand how to position this properly. See, for a candle, you see this is the high of every candle, and this is the low of every candle, but the close and open is different. The close and open is different. So this is the high, this is the low. For a bearish candle, this is the high, this is the low, but the open and close are different. So whenever you are considering a high and a low for any candle, note that this is the high, the top, and this is the low, the bottom. This is the high and this is the low. Note this, because we're going to use it in our next explanation. So to better understand what we are talking about for support and resistance, look at this. You can see as the price was coming down, there is this effect, like a bounce effect, when it got to this particular place. So at this lower place where the price bounces upward is called a support. This is called a support. Please take note. Now you see the price is going up, and on approaching here, it bounced away. It was rejected. This is called a resistance. Now you realize that for just a normal ball, once you throw a ball upward and the ball hits the ground and bounces, the ground is acting as a support to the ball. So it's supporting it for a rebound. And then whenever the ball is getting to a roof, maybe the roof of your house or the ceiling, and the ceiling knocks it back downwards, the ceiling is acting as a resistance. So this is support, this is resistance. This is support, this is resistance. These are certain levels in which you are able to draw and determine the movement of price. And this is very, very important, because they are very, 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 very important levels that can change the direction of price and also tell you if you have taken a very perfect entry or exit, depending on how you approach it. All right, so there are four really top types of support and resistance, and for these four types we use it for the different strategies. So if we say these four can be trading strategies for that you can use at any time. So these are support and resistance that you can use as your trading strategy. We're going to go through four types now. The first one I want to look at is the range trading. Is the range support and resistance in a range. Now this takes place in the space between the support and resistance, as traders aim to buy at support and sell at resistance. Or if you are trading downwards, you can sell at resistance, and then you can also buy at support, depending on how you want to go about it. So thinking of the area between the support and resistance as being a room. Like I told you, I just told you example. Support is the floor and resistance is the ceiling. Just like the example I told you before. Ranges tend to appear in sideways trading market where there is no clear indication of a trend. So you realize that it's as if you see that it's as if the market is going sideways, but in a bouncing kind of motion, and it's going sideways. You can't tell if it's an uptrend or a downtrend. This is called a trend market. And then once you draw the ceiling, which is the resistance, and you draw the floor, it's really a good indication and can help you know how to trade the market. So this is what a typical range market looks like. A range trading looks like. You can see how the whole thing, the whole price movement, the way it's moving, and look at the resistance that was drawn. You can see that there are a lot of candles that connects this. So this is a point in the chart that all these candles are a part of. You can see that as it comes down, look at the support as well, acting like the floor. So once the price got here, it came here, got rejected, it came here, got rejected, it came here, see, it tried to penetrate, got rejected again, it came here, got rejected, it came here, as the support rejected it, it tried it again, rejected it, tried it again, rejected it. So it went up, about to try here, got rejected, came back, we got rejected, tried it again, got rejected. You can see here, it went up. This is a range market. If you are able to spot this kind of market, all you do is at this spot, you once you are able to establish it, you sell at this spot, you buy at this spot, you sell at this spot, you buy at this spot, you sell at this spot, you buy at this spot. So you see, you buy at this spot, you sell at this spot, and you are milking the market. Look at, you get here, you sell, you get here, you buy, and it continues like that for the duration of the range market. So if you are trading, please take note. Once you see a pattern like that, all you need to do is to draw your support and resistance. Now, how did they draw the support and resistance? See the resistance now. Resistance was drawn trying to connect the high and the high position, the cloud, the high point. So trying to connect it and see how to connect it in a way that it forms a layer. And look at this, most of these are the low point, so it's connecting them, and then that's how you draw it. All right, so the second type of strategy that you get from support and resistance strategy is the breakout strategy. You've seen the range market, and you realize that during the range market, there was a time price was about to break the support. That is a breakout strategy, and you can see that it was pulled back. It was pulled back. So you need to be sure how the breakout is. So it's often the case that after a period of direction or sanctity, the price will break out and begin trending. So from a range market, price usually determined to go on a trend from a range market. So for the stock market, most of the time it is referred to as the Asian period and the New York period, where the Asian period price is on a range, and then the New York period price breaks out either through a resistance or a support, and then starts to range to trend. To trend. So traders often look for such breakouts below support or above resistance in order to capitalize on further increasing momentum in one direction. If this momentum is strong enough, it will have the potential to start a new trend. So when you are seeing a range market, then you should get ready, because price is about to form a new trend. There can be an uptrend or a downtrend. So once you take note, as price breaks above a resistance or below a support, you get ready to join the trend. So this is a typical example of what a breakout, support and resistance strategy is. You can look at what price was doing here. This is like a ranging market. You can see there needs to be one here. It's ranging. Once it gets here, it breaks back. It goes back. Touch here, it bounced back. Touch here, it bounced back, rejected. And you can look at now here, it breaks through this support. So when price breaks through the support, it's telling you a trend is about to begin. So once it breaks here, you can see when price tried to retest this place, it got rejected. So once it breaks through here and here begins to act as a resistance to it, then you know that price is going down. So this is your entry point. Once you see a breakout, you wait for price to retest this place, and once it retests and it gets rejected, that means this support which price broke through has now begun to act as a resistance, which is saying that price is going down on a long trend. So you see the continued downtrend momentum. See, so if you have picked your entry from here, see how far you will have gone in milking the market. So this is one very beautiful strategy that you can use once you see that price is about to break out from a range or a pattern of resistance, a support resistance. All right. So the third strategy that you can develop from support and resistance is called the trend line strategy. This strategy utilizes the trend line as either support or resistance. So it utilizes it as either support or resistance. So what you do is that you simply draw a line connecting two or more eyes. Like I told you, like I showed you before, in a typical candle, you see where the eyes are. In a downtrend, you connect the eyes or two or more lows in an uptrend. So when you connect it, and then you are able to so you connect two or more eyes in a downtrend, or two or more lows in an uptrend. So once in a strong trend, price will bounce off the trend line. So if it's a downtrend, you connect two or more eyes, and once price is getting towards the trend line, it bounces downward. It gets the resistance. The trend line will act as a resistance, and then it will go down. And then for the uptrend, when you connect two or more lows, once price comes towards that trend line, it will act like a support, and then it will bounce back upward. So therefore, traders should only be looking for entries in direction of the trend. Don't trade against the trend, because trend is usually strong, and then you can't tell how long a trend will stay. So don't trade against a trend, trade with the trend. All right, trade with the trend. So guys, this is a typical example of a trend line strategy using support and resistance. Look at this. This is an uptrend, and in uptrend, I told you connect two or more lows. You can see these are the lows. Like I told you in the typical candles, these are the lows. See, this is connected. So see how this is connected. And once it's connected, you can see buy entries. Once it came towards this place, you buy. Once you get towards this place, you buy. See, you see your profit comes to here, you buy. Once it gets here, you buy. Once it comes towards here, see, you buy. You can see that only look for entries in the direction of the trend. Trend is an uptrend, so you are only looking for buy entries. These are opportunities to sell, but avoid it if it's a trend, because you cannot tell how strong the trend is, and how long it's going to take. So the safest way to trade here is to trade with the trend. So only take buy signals, and this will help you. And also the alternate, the opposite also works. Once you see a downtrend, you connect eyes together, and then once it's approaching the eye, you just place a sell. So it's going to go trade with the trend and not against the trend. All right. So lastly, guys, for the strategy, you can use moving averages as support and resistance. This works really well as well. So moving averages can also be used as support and resistance, and the popular one that is usually being used is the moving average 20 period and 50 period. So either simple, exponential, depending on what you prefer, but the period is 20, period 50. Usually they act as very good support and resistance. You can also slightly alter it. You can use period 21 and period 55. Some other people use period 100. Some use the 200 MA as well. So once you look at it, then it acts as support and resistance, and just like a trend line, you can use that to pick a movement. And once it approaches the line, you trade in the direction of the trend. All right, trade in the direction of the trend. So guys, this is a simple demonstration of moving average acting as support and resistance. You realize that at first the moving average is acting as a resistance because this is a downtrend. So you are connecting, it's acting as a connector, where a resistance, where when the price approaches it goes downward. You can see it tries to break out, but got rejected, goes downward. You can see here it went downward. You can see it tried to approach it, it went downward. And then this is a breakout from here, and then from here is acting now as a support. Once it gets here, it bounced upward. As it's coming close, it's bouncing upward. You can see it came here, bounced upward here. So a moving average can act as resistance and also act as support. Once you know this, you are able to really know how to trade the market. So right here, what you need is to sell, because it's acting as a resistance. So you sell, but right here you take only buy entry, because it's a downtrend and this is an uptrend. All right, only trade with the trend. So all right, guys, in conclusion, the takeaways you can know about support and resistance are these. Support and resistance is powerful. It's very powerful, and it's usually most times in almost many analysis. Support and resistance is taken into consideration. Secondly, support and resistance strategy can either be based on price respecting this level or anticipating to break the support and resistance. So it's either the price will respect it as in a range market, or it's anticipating to break it as in a breakout and pullback strategy. And then lastly, price will not respect support and resistance forever. So that's what you should know. So there cannot be a respect for it, just like you saw in the previous chart I showed you, when the moving average was acting as support and resistance. You can see it was first of all as a resistance, and then price broke it, and then later began to act as a support. So price will not respect support and resistance forever. Bear this in mind. Traders need to adopt sound risk management. Please adopt sound risk management that will help you to ensure that you don't make losses. I hope you guys have gotten value from this video, so please kindly subscribe to this channel and get ready for more amazing videos. Since this has been taken off the off, then several strategies that depend on this are coming your way very soon. So stay tuned, and then try and make sure you have a sound understanding of this, because once you understand it will really help you going forward. All right guys, take care.